Goehring, managing partner at Goehring and Rozencwajg Associates, New York-based firm. Thank you so much for joining us here on the sidelines of Minds and Money in New York.
Oh, well, thank you.
Yes. Well, let's talk about the big news here, or kind of news that's not having the markets react so much. Trump's talk on Iran deal here, the markets seem unfazed by the news. Surprised here?
Gold markets, no. I think that the biggest effect of the whole Iranian reimposition of sanctions is going to affect the oil market, and I think that that will lead to further upward pressure in oil prices. But I still think that the bull market in gold, which hasn't started yet, still has a little bit of a trading characteristic about it for the next 6 months or so.
So some here that I interviewed would argue that we're at the tail end of a secular bear market, but you're saying we have yet to begin the bull market.
I think we have not started the bull market in gold. And I think that what we have to have is some sort of undervaluation of gold take place. And I think that undervaluation is going to surround the price of oil. And as I mentioned before to you, I think we're repeating the 1998-99 to 2000-2001 experience in the oil market and the gold market. If you remember back in the first quarter of 1999, oil hit $11 a barrel, gold was almost $300. So an ounce of gold bought 30 barrels of oil, which in our long-term modeling of gold and oil, that made gold very, very expensive. So we should have expected oil to rally sharply after that, which it did. It went from $11 all the way up to $35 in the next year and a half, whereas gold went from $300 down to $250. At that point, at the end of 2000, oil was at 37. Gold had fallen down to 275, and at that point, an ounce of gold only bought 7 barrels of oil. It became radically undervalued. And then what happened? Gold over the next two years took off. Gold stocks were up 500% in the next 3 years, and oil and oil stocks did almost nothing.
So given the news we saw yesterday, came out yesterday, do you think gold will have the same trajectory here? Will it be a sharp rally that you're forecasting?
Well, I think what's going to happen is that oil will continue to do well. We've been in the press multiple times saying that in this cycle, oil is going to go over $100 a barrel. I know that's very contrarian. We were called crazy, but now with Brent approaching 80, it doesn't seem so far-fetched. However, if oil were to go to 100 and gold were to stay at these levels, you're getting down into that undervalued area, 10 to 1, where only an ounce of gold only buys 10 barrels of oil. At that point, I believe that gold will be radically undervalued and will take off. That will be the beginning of the bull market.
Within this rising interest rate environment?
Yes, rising interest rates don't bother me. In fact, if you look historically going, whether it be the great bull market in gold in the 1970s or the bull market in gold the last time, both of them occurred in rising interest rates. And ironically, not only what rising interest rates does is good for gold, but it's also ironically bad for the dollar. Ironically, if you look at rising interest rates, the dollar actually goes down, which is exactly opposite than contrarian opinion believes. So I think that once the Fed continues to hike interest rates here, the dollar will continue. Will roll back over, and that'll be a huge positive for the gold market.
Leigh, switching gears here, other headline this week was Warren Buffett calling a Bitcoin rat poison squared.
Right.
What'd you make of this?
We don't get involved in the whole Bitcoin cryptocurrency debate. It's not something that we know a lot about, or that I have a lot of experience in, except that I think you can say that it fits into the mold of a investment craze that grips markets every once in a while.
So not stealing gold's thunder.
I don't think it's going to steal any money flows from gold.
Leigh, thanks so much for joining us.
Okay, very good. Thank you.
Thank you for watching. We'll have much more for you on Kitco.com. Thanks.